Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call, the day after the Fed statements. Now, I think yesterday was a little bit of a surprise considering that they were a bit more hawkish, saying that the December rate hike could be still in play. And in play, I guess, is the key phrase, which then had a few things transpire when, rate increases are in play, which they might not or they might be. The banks get a boost, which they did. You had the Russell play some catch-up, which was nice to see for the market to broaden out. And you had technology that's been very strong, push back to the highs of the year. So a little tricky spot considering about 11% off the low. So the question was, overseas, would they follow our lead? And they did not. They're flattish. They're not falling apart, but no real follow-through showing that, upside from here might be muted for a little bit, but we still can get very specific action. If you look in Europe at the DAX, it's flattish. Go to the HEDJ. We've gone over this methodical move that started with the August lows, and then you had your double bottom. And then remember this trade when it cleared the lower pivot, giving you a trade above the 58, hit 61. We talked about buyable pullback, which you could have done here, and now you're still at highs with, I think, some room to the upside. So at this point, I think if you are along the HEDJ, just put a stop in at 59.50 and try and let it go. As far as Asia is concerned, mixed picture, a little bit down, no clear-cut patterns there, but it's not a headwind. Our markets, you go to the SPX, and wow, look at the move that we've had here in this market. So basically, if you just sat and didn't do a thing, which is really hard for people to do, maybe you're an investor, you're right back where you started in August. If you traded this breakdown below all the moving averages, you then had the opportunity and luxury to play the technical double bottom we had on top of taking out the lower pivot, on top of taking out this lower resistance and retest, and then look at this trend we've had following the 8-day moving average all the way up to where we just went up above a prior pivot yesterday on the Fed. So look at this 8-day moving average. One of Red Dog's rules I always talk about is trying to be long above the 8 and 21 day, not short. So a lot of you guys who have been fighting this short the whole way up, if you had that rule, in your tool belt, you've been just fine. So anyway, we've had lots of pivots along the way to make adjustments, and at this particular point, we traded through one more. But we are the day after Fed, so you have to be a little bit careful that sometimes you get a trend reversal. So with that being said, I'd like to see this 2079-ish hold, okay? And if it doesn't, I think that if you've been involved in this rally for the past multiple weeks, make sure this is really the line in the sand. So maybe we'll see a little back and forth in the air. I'd hate to see this give back this entire day. If that were the case, then I think some traders would probably reduce some risk. Let's see if we just get a little bit of a muted down one like we've seen during the course of this recent run. So my focus is going to be a little bit to see on what happens with the Russell. The Russell finally broke out yesterday above a lower pattern to see if you could play some catch up. You look here, I've talked about this inverted head and shoulders pattern in the Russell. Okay, and yesterday you finally had a nice breakout. Here is your left shoulder, here is your head, and then here was your right shoulder where finally we broke above. So with the futures being down 7 or 8 handles, I think that this 16 area should be buyable. Maybe they push it a little bit lower to 115.50, but hopefully this 115.50 to 116 holds. You could buy that, and then at some point it works its way back. Even to at least retest this 200-day or the prior pivot. You already have so many other sectors back at highs, so I would think that this could play a little bit of catch-up, especially considering the size of the move that it had yesterday. Like look at the Qs, for instance. The Qs back at highs of the year. Digesting this 112 the majority of the week and extended a little bit above. I'd like to see this continue to hold 112. I think you can't really get too bearish unless all of a sudden the Qs reverse and start heading into this big open gap. So, the Qs have been the leader. The IBBs played a little catch-up yesterday. Not the IBBs, the IWM, but while we're talking about the IBBs, we talked, the reason why is because this one already did so too. This one gave you this trade above this lower pivot, gave you an extra day of follow-through yesterday. I talked about perhaps support holding, which it did yesterday, and now, it's into a little bit bigger resistance, so I would just take a little care right there. But ultimately, at some point, maybe it tries to, get down to, or get up to this area. This was a nice tradable move. The banks responded really well yesterday, because they love the hopes of a rate increase, even though it might not happen, the street likes to buy banks when they're set up, and this was a nice little move. Let's take a quick look and go maybe in the trenches actually with some of the banks. Goldman Sachs, which has been weaker for the majority of this year, okay? If you got out of your Goldman Sachs when it broke, pretty much this trend right around here, or broke big support right there, you've been able to play this lower area. And this for the first time broke above a decent sized pivot. Hopefully, it doesn't just fall apart today with the futures. If you look at your 5-minute chart, perhaps to see where it should hold as far as yesterday's support, you would think that if this is any good, I know I'm long Goldman overnight, I would like to it not see a move below this 190. Okay, maybe they push the envelope 189.50, 189.50 to 190. If you sold the strength on the close, maybe you buy that back. If you're in it overnight, smaller than you had during the day, this is your spot to potentially, add a bit. Okay, you go back to some of the other ones, you could use the exact same strategy. JP Morgan had blast off yesterday. Okay, I'm actually long JP Morgan also, but it probably will be down a little bit with the futures. It took out this lower pivot. So the question is, can you buy a little bit of the weakness this morning? So you go to the 5-minute chart on JP Morgan, same kind of thing. You had a big move from this area in the afternoon. So if it wants to retest this 64.80, okay, perhaps it's buyable, okay? And then I would not like to see it get below this spot. So that's my thought process on the banks. I'd like to see some continuation, and we'll see if that's the case. You could put your 5-minute chart up on Citigroup, Bank of America, all the rest. I'm not going to go through them all. As far as big cap tech or high beta tech, they've been acting very well. Yesterday, Apple, finally after earnings, after the push-pull back and forth, it had a nice strong day. Question is, can you get a day two? I'm hoping. I'm in Apple also. Apple actually held its gap, cleared some moving averages, poked its head above weekly resistance, so you would have thought there would have been some follow-through. But I think NXPI, one of the suppliers, is down a lot, plus the futures are down. So anyway, if you look at Apple, you go to the 5-minute chart, it spent a lot of time above this little area. I remember during the entire time they tried to push the market down yesterday, it would not go below it. So I'd like to see this 117.50 hold. Granted, you could trade versus gap, but if it gets all the way down to this gap, some of us are going to be in a bit of pain. I was hoping for upside follow-through, not having to deal with buying a bit of a dip today and letting it try and go green. So I would say, if you're long some overnight, buy a little bit more into here. If it starts breaking 117.50, I guess either you'll stop yourself out or you'll see if you give yourself to the gap. But overall, you would think that Apple, after fighting off the sellers yesterday, and closing strong on some decent sized volume, would continue to the upside. So we'll see if that happens. Two stocks that have been acting much better, that we go over every day is Google and Amazon, and they're right near their earnings pivot high. So the question is, with the futures lower and them off a little bit, can they go green and push through that for a trade today? So I will be watching Amazon to see if I could buy it, in the red. And then if the futures get a push, you would think that maybe there's a nice little trade here above this, because if you're short Amazon, it starts going through 619.45, you're covering. So you did get your one trade as it protected the gap right here, and now here could be potentially another one going through that high. So I think Amazon, best in breed, is worth watching today. Also Google, same kind of setup, not quite at the highs, but it also held above the gap from earnings, showing you power. It's been nudging its way up, so maybe use this as a pivot, and then this is your second pivot. But if these things can't find the bid and get hit hard, then you'll know that the market might just not have any strength whatsoever. Netflix also gave you a bit of a move back above the 50-day. We talked about potentially getting a day trade here in Netflix when it cleared this spot. Actually even started here, and now you have 3 days to the upside. I know they're small, but decent trade. So now I guess see if this 102.50 holds for it to continue. But I wouldn't expect too much, considering it's up about $7, $8 in the last few days. Overall, you have some room to this descending channel here. As far as the metals got hit pretty hard yesterday. They don't like when the Fed is hawkish, and you had this big wide range gross candle here. It looked as though it could be taking that out, and now I would think most people got sold out yesterday on that. If you didn't, it's got to regroup fast. Otherwise, you better use this as your stop, which is 110.30. Use 110.30 as your stop. Otherwise, I think you could be in harm's way down to here. If it opens up 40 cents today and holds in there, maybe this was just a false move, just like people thinking that the Fed could raise rates in December, but who knows? On the oil front, the USO had a potent move yesterday, and we talked about a few things that had to happen to broaden the rally. One of them was oil finally getting a bid besides leaking, and you did see that in the USO. The USO had its day one. We talk about day ones and what they lead to. Down here, this day one led to day three. Then you had this channel, that it held and went above it before giving you that false breakout, and now it's going to try again from here, which is also considered a higher low. From here, a higher low. Now the question is, can it, hang in there? So I guess see if it could hold, maybe 1420 again. So if you extend this line to see if it stays back in this range besides the overthrow, see if it holds 1420. And for the XLE, I would think the same kind of thing. It did break below this pivot here, but now I guess you can almost draw a bit of a bigger flag versus the tighter one, which that's what happens sometimes. Sometimes things get a little looser, and at this point now you have this bigger range within here, but it's still holding some commitment to that move off the lows, and see how much longer it needs. And if it were to ever get above this, that would probably help the overall markets. I know the casinos have been battered and bruised, but just for a trade, I know MGM is up. WYNN has been a disaster, but you look at WYNN, it too had a decent move off the lows here, held this support, and then maybe if it could clear and stay above this, what is this level here? This is 68. You can get a move at least back up to this area. And if you look where WYNN has come from, it's been so annihilated. And if you look here, as a rule, you didn't have to be involved for this annihilation. You had, where's my little line here? You have, this trend. Where is, oh, here you go. From here where, it broke the 8-21 there. It broke major support and the 200-day here. So stocks are not swing trades below the 8-21 day, and that was around 220. And stocks are not investments when they break the 200-day and stay below it. That was a 200. Now look where we are. Could have saved you a heck of a lot of pain. So if you're looking to maybe get a cute retracement trade, maybe now is somewhat of the time here for that to continue back to resistance. But again, it's broken. LVS, you could say the same kind of thing, actually acting a little bit better, but still choppy. But again, looking for things to do, looking for patterns that are set up. Perhaps this gets an additional move back into resistance. GPRO, which has been absolutely broken trend, annihilated, out of favor, is at yearly lows. They did come out and they were weaker than everything. It had a little bit of volume yesterday and sold off hard. I actually took a little bit of an option play just for fun, which will be worthless. But down here, see if it opens up, opens down $5, trades off of it, and then maybe you could be a buyer versus that for it to, be priced in, because again, the stock has been annihilated. So maybe, GPRO can give you a trade this morning, but again, I wouldn't just buy it. I would say, okay, watch it put a 30-minute print in, and then maybe buy it versus that. This thing was at $100 and now it's at 25. But again, that's what happens when things break. Lastly, I'll just touch on Facebook. Unbelievable trend, unbelievable stock. It's still so strong. I would not be shorting it up here, but I also probably wouldn't be buying it up here. Your last few buys were right here. Okay, your red dog reversal there, and now it's coming into new highs. So again, above the 8-21-day above all moving average shows you leadership. And I've been in a call spread that I just funded yesterday, so it was a nice, I think, 200 to 400% for some guys on the chat on our BTF. And now we'll see what happens into earnings next Tuesday. Twitter, what a crazy, crazy stock. The options we took that I think went out at 250, I salvaged them for 150, so it wasn't a zero. And now you have this bigger range, and I'm going to try and let bygones be bygones. Not going to over-focus on this, but if this happens to trade above 31.50, 32 with heavy volume, maybe after a day or so, I'm going to forget that this all happened and see if there's another trade there. But pretty impressive that it held support that we went over yesterday and worked its way back to almost green. And if they did just lower everything, they basically don't have too much to beat, and it looks like the guys who are buying it down here showed back up. So with all that said, it is the day after Fed Day. The futures are lower. I was hoping for a little bit of upside follow-through, but we didn't get it. We'll see if there is upper commitment that holds, which is somewhere around that 2,075 to 2,079 level in the SPX. That's also like 207.50. If we start not to hold that and give back more than half of yesterday, yesterday's move to me gets a little bit more skeptical, being like capping off a trend that we've had for a month. So I would take a bit more care, especially if, high beta tech starts selling down and the IWMs can't hold 116 and the banks give back half. If all these things start happening, I would just, take a step back. But if today we open up down 90 points in the Dow, down 9 handles, and we are off small by the end of the day, this stair-step trend where you could look for good longs and hold multiple positions and try and use a hedge could stay intact versus 2 to 3% pullback that people are calling for before perhaps a rally that continues back later to end this year. So we shall see. Stay on alert. We have GDP today and lots coming up, and we'll try and manage and tactically move around together. Have a great day.